Good evening and welcome to another Adam Smith Institute webinar. I am Morgan Schondelmeier, the Head of External Affairs at the ASI, and I'm very eager to start tonight's discussion on all things taxation. Just yesterday, we marked Tax Freedom Day, which is a day that the ASI calculates annually to determine what day you stop working for the tax man and start working for yourself. So before yesterday, every penny the average Brit earned went right to the tax man. It was later than ever before, which means our tax burden has never been greater. The title of this webinar is The Changing Tax Consensus. By that, I mean that we seem to be facing a rapidly changing attitude towards the size of government, with more parties moving to a high tax, high spend agenda. Of course, this has been accelerated by the COVID crisis. So I want to discuss what sort of trends we are seeing, both domestically and internationally, and whether or not they're inevitable. What is the deal with the international minimum corporation tax? Are we now politically locked into a high spend reality? And what's next for traditional defenders of a low tax system? To discuss all of this and more, I'm joined by an excellent panel. First, we're joined by Steve Baker, MP, who is Member of Parliament for Wickham since 2010. He currently serves on the Treasury Select Committee and is the Deputy Chairman of the COVID Recovery Group. Previously, he was Parliamentary Under-Secretary of State at the Department of Exiting the European Union and Chairman of the European Research Group. We are also joined by Richard Tether, who is a leading British academic specializing in taxation. He was Senior Lecturer in Tax Law at Bournemouth University for over 20 years and is the owner of Tax Strategy Consultancy, which advises clients all over the world, including numerous governments. He is also an ASI Fellow and regularly writes for our blog, which I'm sure you are all avid readers. Unfortunately, Polly cannot join us as she is having some connectivity issues, but we will keep her spirit with us as we move forward. I have some questions for her that I prepared that I'll send to my other guests instead. So I'm going to bring my guests in one at a time for introductory statements before moving on to the chaired Q&A portion of the discussion. So please be sure to submit your questions for our panel in the Q&A box below, and please use the chat function if you wish. So I'd like to turn to Richard first. Richard, you're someone who advises on tax and have done so for many years. So I kind of want to see, what do you think the trends are that we've been seeing in tax policy over the past years?
Yeah, thank you, Morgan. There's two huge problems I see in tax policy. One is simply that government's spending too much money and therefore they're trying to collect too much in tax. If we look at internationally, there's a point somewhere around 40% of GDP. Once the government starts spending over that, the economy starts to falter. And once you hit about 42%, it really stalls, and particularly job creation falls off a cliff. I looked at this across the EU, across about 10 years, and there's a really marked cutoff point. Once you get above about 42% of GDP being spent by the government, no country above that actually manages to have a dynamic economy generating lots of jobs. And we saw this even before COVID with all the shocking levels of youth unemployment that we saw even in some quite major European economies. If we could go back to 2000, say, remember that's 3 years into a Labour government when Gordon Brown was Chancellor, if we could take spending back to that level, allowing for inflation and population increase and so on, we could solve a lot of our tax problems. So that's one problem, that government's just spending too much money, trying to collect too much in tax. The other problem, which is more conceptual one, is that in trying to raise that extra tax money, they're looking at businesses and particular large corporations as effectively a free ride, as a way of collecting extra tax revenue without it hurting their electorate. One thing that's we really need to get across to policymakers is that that doesn't work. No matter how you dress it up, whether it's anti-avoidance or global minimum tax or whatever, if you try and collect more money from companies aren't real people. They're just a legal fiction. They're a collection of stakeholders. And if you try and collect more money in tax from them, then those stakeholders have to suffer, whether it's the shareholders or the consumers, because as the government takes more money, the company's got less, so it puts its prices up to try and compensate. We've seen that particularly with the online sales taxes. Or if it's not those two, then it's the workforce. Pay freezes, hiring freezes, lack of growth, and even worse, but harder to see, just lack of new companies coming in because the higher tax rates are discouraging. And so one of those groups or some combination of those groups is going to suffer whenever you raise taxes on businesses. And what we've seen, and there's been lots of studies on this, and they all come to slightly different, but more or less the same results. There was a big one by Oxford University a few years ago, that the group that loses out most when you tax companies is the workforce. That's counterintuitive. We expect it to be the shareholders. I'm not saying it's okay to clobber the shareholders either, but actually what's happening is the workforce is losing out most, and secondly, the consumers. So actually, although governments, politicians are thinking that this is a free ride, that they can tax these big businesses without it hurting their electorate, it doesn't. It all rebounds. And again, within a relatively short period of time, you start seeing this loss of job creation, loss of opportunity, loss of new competition in the marketplace, loss of new products, and prices creeping up. So big problems there. And as we've seen across Europe, yes, you can protect the people in work, and they often are, but the people who really lose out from these are the young people looking for their first job out of school or out of university, because they're just finding that the opportunities aren't there. So yeah, two big problems. One is first trying to cut down government spending. And yes, it's been high because of COVID, but there seems to be a general idea that it's going to increase even after that. And second, try and get around this idea that big businesses are just there to be taxed, and that the only benefit of having them is to collect more tax money, and that this is a free source of revenue for the government that doesn't harm the rest of the economy, particularly doesn't harm the voters. That's wrong. It does seriously harm the voters, partly as consumers, but particularly in their careers and their job opportunities.
So you sound a bit exasperated when you're explaining this, because this seems like common knowledge to many of us. But why is it so hard to get this across? And do we think this sort of shift towards accepting higher levels of tax and the lower growth that may come with that, do we think this is a political inevitability at this point? It seems like we're kind of banging the drum, but making not enough progress.
Yeah, it's really tough. I've been saying these things for 20 years. There've been lots of studies, all of which come up with much the same answer. These are things that are known. There's no real excuse for politicians for ignorance on this. But yes, they want the money, and it's difficult conceptually. It's difficult to get across that link between taxing a business on the one hand and then the side effects on the other hand, because a lot of them are hidden. A lot of them aren't even companies laying off staff. A lot of it's just the loss of new businesses coming through and so on. And it's very difficult to see something that was never there in the first place as having been lost. So yeah, trying to get that across. And what's really happened, one of the big changes that I've seen in the last 20 years is that we've started seeing sort of almost a moral thing coming in here. They're trying to use tax avoidance and so on as a moral issue to try and say that companies ought to be taxed more, that businesses ought to be paying more. And I think that's providing a lot of cover for the government, as is, of course, green taxes as well. Again, they're able to say that, you know, this isn't just us collecting more money, this is trying to do good, this is trying to right some wrong and so on. So there's a strong moral message which has gone down well with quite a number of people who don't see the disadvantages because they're hidden and they're, you know, 2 or 3 stages down the line there. Not saying that green taxes are bad. The ASI was one of the early people pushing pollution taxes. But what we did with the ASI 20 years ago was we said that you should shift taxes from good things to bad things. Yeah, if you're going to increase taxes on pollution, on traffic, on carbon emissions, whatever it is, then you should be cutting things like national insurance and corporation tax and so on. So there's nothing wrong with rejigging the tax system in that way and taxing things that are better to be taxed than worse. But what is wrong is using that as a cover to increase tax rates generally. That's where we start really having this economic damage.
Yeah, and it's making sure that the incidence falls on the people who are responsible for the negative activity that you're trying to eliminate, instead of everyone, as you say, with general rise in taxation. I think that you made an interesting point about the morality of kind of pushing these tax policies through based on kind of larger moral political ventures. I'm going to touch on that later, but first I'm going to bring in Steve and let him get to his introductory statements, because I've got a lot of questions to get to in the Q&A. So thank you so much, Richard, for your introductory statements. Let's bring in Steve now. And just a reminder that you can submit your questions for our panelists in the Q&A function. So Steve, please take it away. Thank you so much for joining us.
Well, Morgan, thanks very much indeed for having me along, and thank you everybody for joining us. I've had a quick look at the attendee list, and I can see that some of you are far more eminent in these matters than I am, and I can see that one eminent attendee has already started with the hard questions, so I'm looking forward to getting on to it. Thank you, first of all, to the Adam Smith Institute for making accessible this concept of how high the tax burden is. You'll see some slides rolling through behind me, and I just want to talk through some of them. This, of course, is the slide on the where Tax Freedom Day falls, and it is an extraordinary thing that, with just one exception, Tax Freedom Day has fallen later and later under Conservative governments, and yet we still know that we all believe in lower taxes. Somehow we've got to reconcile what we believe in with what we're actually doing. And that's why I've said this can't go on forever. In order for us to be prosperous, eventually Conservatives must stand up for the formula we've always believed in: limited government, low taxes, balanced budgets, sound money. We know what the formula is for the classical conception of a good economic policy, but we're just very, very bad at doing it. The old problem of make me virtuous, but not today. So just to go through some of the things which are going on, there's this wonderful set of charts from the OBR. This one shows the budget deficit, the borrowing. You can see the difference made by coronavirus has been absolutely enormous, a huge shift upwards. This chart that happens to be on screen at the moment is from the Fiscal Sustainability Report from the OBR. You'll see that the debt projection goes out to hundreds of percent of GDP. On the median scenario, it's 250% of GDP by 2059 to 60. And in the commentary of this report, it does explain that this is not expected to happen because, as one report euphemistically put it, policy would have to change. But let's talk about what that policy actually is. It would mean dramatic cuts to age-related spending, and that's quite likely politically infeasible. So where are we today? Where's the money coming from today? Well, happily, excellent charts and commentary from the OBR, in particular this one, showing where assets have come from, how money has flowed around. I'll leave people to look for that in various documents from the OBR. That one's from the latest commentary that comes with the budget. But they explain that roughly, looking at the government's issue of gilts, that the OBR explains a roughly equivalent quantity of gilts has been purchased on the secondary market by the Bank of England's asset purchase facility as part of its QE programme. The bank has financed the purchase of these gilts and some corporate bonds by issuing an equivalent amount of its own liabilities. So while we think that we're operating beyond what people will pay in tax or what the government can raise, and we seem to pretend that we think we're borrowing people's savings, the truth is that the Bank of England is issuing about as much new money through QE as the government is borrowing, and it's because it's passing through the market that it's not direct financing. But this is an extremely precarious position to be in. So in concluding my remarks briskly, because I want to come on to your questions, not least the four, I think, now that have come in the chat, I think we now need to go back to some of the origins of this great institute, the Adam Smith Institute, and that's the theory of moral sentiments. Because if we have any care at all for the welfare of our fellows in this society, then we need to set up institutions and practices which support that welfare. There's a paper by David B. Smith on the taxable capacity of the UK economy, which he submitted to the Treasury Committee, and it corresponds very clearly to what Richard said. The taxable capacity practically appears to be about 40% of GDP. We were nudging up to that before the general election, and then we've been, it seems, seeking to go further. The welfare maximising level, just checking my figures, is between 30 and 35% of GDP. The growth maximising point is between 20 and 25% of GDP. So here's the problem we face. If we want to maximise welfare, then we need to cut spending by about 5% of GDP. And no one's very good at saying where that will come from. And yet, if you look at the fiscal sustainability report, we're heading into a scenario which obviously just can't go on. And right now, in the midst of it all, we know that we're propping up using QE, spending on coronavirus, which is clearly unsustainable. Out of this Gordian knot, there is going to have to come a serious set of policies. Only the Conservative Party can deliver them. And I think it's incumbent on members of Parliament like me to stand up and say, it's time for us to look seriously at the level of taxation, the level of spending, and to speak truthfully to the public that if we care about your welfare, we're going to need to cut spending and we're going to need to lower taxes.
Thank you so much for those statements. And, I think we'll find that a lot of our attendees will agree. And I really appreciate that you've linked spending into this discussion because, of course, it isn't just about tax. The reason we raise tax is to then spend it. So what do you think are the moves we can make to kind of get that across, fight the political loggerheads that you're going to be facing when it comes to cutting spending? You mentioned age-related spending. So at the ASI, we advocate for scrapping the triple lock on pensions. So what are these sort of policies that are probably not going to be very politically popular, but would make a huge impact on this problem?
Well, actually, one of the things, well, firstly, I should say we need to educate people. And somebody, Sheldon Wilkie, has said to us, could we make available links to these documents? Yes, I certainly will. I'll publish these slides on my website, which is stevebaker.info. And before I do so, I'll put links in each page to tell you where to get them. But they're all publicly available documents, like particularly the OBR's report. So I'll make all those available. We need to educate people about where we're going and what it means. So the lead has got to be provided by the Prime Minister, by the Chancellor of the Exchequer, and by the Chief Secretary to the Treasury in particular. The Chief Secretary, of course, is responsible for spending, and we need a Chief Secretary who effectively winces at the thought of any additional spending, because from where we are, it's clearly impractical. Now, the problem is, speaking as a real MP for real people, I'm sitting here in West Wickham. There's about 75,000 people, mostly that way from where I'm sitting, who really need some of this government spending. And we've got to be sympathetic to their concerns. This is a democracy. We represent them. So this is why every question we face is tricky. And I suppose my appeal to the free marketeers here on this call is we've got to make it politically plausible, politically possible to balance the books and balance the books at a lower level. Now, that means all of us have got to start making attractive this doctrine of freedom. We can't simply preach cutting spending and expect people to vote for it. Now, I'll just make one more point. There's a particular problem with this Parliament, and that's that it was elected to increase spending and have a good time. Now, my intake in 2010 was elected to balance the books, and I think we all understood we were getting elected to make tough decisions. But there is, therefore, perhaps a tricky problem of outlook that many members of Parliament are going to be extremely sensitive to any suggestion of a cut in spending. So that is a Gordian knot, but getting through it begins with being honest about the situation we face.
I'm glad you broached that topic on the high spending nature of the current government, because I have a lot of questions to that effect. And so that gives me the green light to ask them to you. I will bring Richard in and we'll just get right into the Q&A. So like I said, I've prepared some questions, but please, audience members, please continue submitting your own and we will get going. So Steve, we kind of touched on this just now, but what do you think is the future for a low tax, low spend party or wing of a current party? Have we moved past that as a political reality? Is it going to take decades to get back there? What is your assessment?
Well, we can't allow ourselves to move beyond it as a political reality, because I believe the way the world works, the fundamentals of the economy and social cooperation are the same. In other words, we need to use free markets in order to provide what we wish to consume. There isn't an alternative. People fantasize that what comes after capitalism is socialism, and therefore whatever it is, provided it's good, must be must be socialism by definition. This is all wishful thinking. It's never worked in the past. It's always created misery. It isn't going to work in the future, however green it may be. And so as we deal with whatever problem we may face, including problems of the environment and climate change, we have to do it in a way which goes with the grain of the real rules which determine how we provide for one another in a free society, and that's a market and market prices, profit and loss, and so forth. So we cannot, for that reason, because the real world is still the real world, we can't allow these ideas to escape the bounds of political possibility. But it's going to take a really determined effort for all of us, because for 100 years we've been losing this argument. And somehow now we've got to find a way to make these arguments attractive. It's possible that we'll fail, in which case what we'll have is a terrible crisis at some point. And then out of that terrible crisis, someone will have to save the day. I would prefer to avoid the crisis, because crisis is never a happy thing. But at the moment, but I think Boris Johnson very clearly wishes to, and I think I know from which advisor he got this idea, but he I think intends a fundamentally Keynesian pump priming of the economy through a huge amount of spending in the next few years, leveling up everywhere with glistening infrastructure, and that restarting the economy and going forwards. And I think we have to accept that that is what he's going to attempt, unless he's interrupted by the bond markets. So there's so much to say to an answer to your question, but I feel I should draw stumps there. My fundamental point is we must allow the doctrines of what I would call classical liberalism to still be a plausible and attractive political economy and sell it to the public.
Absolutely. Richard, I'll bring you in on that. One of the policies that we find that kind of grabs the public the most is the tax-free threshold. So the ASI many moons ago, as you will probably remember, successfully advocated for the raising of the tax-free threshold, bring more people out of tax entirely. So do you think that that's the sort of policies we need to be pursuing that will get people on board and create real change for people of the United Kingdom, or no? Do you think we've moved past that? Or is it time to lift the tax-free threshold again?
Definitely. Actually, that was one of my papers that I started that off way back when. And we campaigned for £12,000 tax-free threshold, which we finally got. But unfortunately, by then, £12,000 wasn't really doing what it was back in 2003 or whenever we started that. One of the things I did suggest back then was that we link the tax-free threshold to the minimum wage. So that once you're, if what we're saying by the minimum wage is this is the amount of money you need to live on, then why should we be taking 20% of some of it in income tax? So yeah, there is that. And I think that can be a very useful argument in arguing against increases in government spending, because what you're effectively saying is, should we be taxing somebody on minimum wage to pay for this? And yes, it's very easy, as Steve said, everybody virtually everybody likes government spending, and trying to say that we should stop doing this particular thing is, you're meeting resistance right from the start. Whereas what we should be saying is, are we actually saying that this is good enough, this spending is important enough, essential enough, beneficial enough, that somebody struggling on the minimum wage should be taxed to pay for it? And that's, I think, a useful argument to try and push. I wouldn't over-egg that, though, because in that case, we get back to where I started from, which is that governments then look for other ways of raising money rather than ways of cutting spending. So we then end up with them trying to increase consumption taxes and corporation taxes and things like that again. But yeah, I think there's a strong argument to be made there. And yes, Steve's right. What works is voluntary cooperation, innovation, all these things that work through the market. Not yet, and I can mention his name because I'm not an MP. So the evidence that we had from Dominic Cummings the other day was all very much that if people like him are making the decisions, are running the economy, then everything will work better. You'd have thought that the problems that they'd had over COVID would have taught him that actually you can't just have one person or a group of people running the economy. We need, the joy of the market is that it brings everyone together and everyone's working together and everyone's ideas are tested and tried out and rubbed off against each other. So yeah, that's what we need to do, is try and get away from this do reduce thing. But yeah, it's far bigger just than fiddling about with the details of the tax system, unfortunately.
Yeah, this idea that the state would work if only the right people were in charge of the levers, I think you can call the spell of Plato. And just in short there's a big fat book with a red spine called The Open Society and Its Enemies, which is about this very myth. And it's a long book, but it's a very old, very wrong myth, which has led to some dreadful political regimes. But to come back to your question about the tax threshold, I really do think it is unacceptable that you can't make a subsistence living in the UK before you start paying income tax. I mean, really, you should be able to make a subsistence living, define subsistence, but that includes being able to pay for somewhere to live, you know, and around here in Wickham, that's quite a lot of money, you know, it's an expensive place to live. But of course, raising the tax threshold is quite an expensive thing to do from the Treasury's point of view. But I would say one of the things we need here is we need a real culture of thrift for every employee of the state. I mean, the state should always be living austerely. They should, every time a penny is spent by the state, people should remember that it was taken by force from other people producing in the market. There's this new terrible idea called the idea of the entrepreneurial state, and there's been an excellent book debunking that by Deirdre McCluskey and Antonio, the Italian think tank. I know him well, and his name has just gone from my mind. Somebody will put it in the chat in a moment. But this idea of the entrepreneurial state's been debunked. Alberto Mingardi, thank you very much, Eamon. Alberto is a wonderful writer. They've written this brilliant book. We've got to debunk this idea of the entrepreneurial state. The state is not, insofar as it is a market participant, it's a privileged one. And we need to get everyone working within the state to always remember that they're spending other people's money taken by force.
That brings me to a question from Sheldon Wilkie. He says the Treasury's been traditionally cautious in reducing taxes. Would a conservative government or any government have to reform the civil service in order to achieve the thrift you were discussing, or is it purely a political problem?
The civil service looks upwards to ministers, treats ministers as the client. I've always felt, or I felt while I was a minister, that the civil service was in a sense looking for the monarchy to return. But ministers, I'm sorry to say, are treated like little princelings, as if they were the customer. So a PowerPoint slide deck handed to the minister will be treated as output that's valued. Now, it might well be valued because people are brilliant in the civil service and we value them and we value their work. But actually the output everybody cares about is what they're paying for in taxes and the public services that they get. So what is required from ministers is to take a lead. So to give you two examples of what I did to try and create a culture of thrift. First, was to say to people, actually, that's a wonderful slide deck, but please don't spend any more time preparing slide decks. Just bring me your working documents and talk me through them. Let's have the minimum of preparation of these documents. Let's focus on the taxpayer. And the second thing was, when inevitably, because we added an extra minister, my office needed to be moved, I insisted that my office furniture was normal, cost-effective furniture that one might have in a startup, rather than extremely expensive furniture suitable for an art gallery, which is what ministers usually are provided with. So it is for ministers to provide a lead, and I think ministers can provide a lead if they insist, and say to civil servants, you're doing a fantastic job and we value you, but we just would like to spend less money, please.
Another point, a point from David Middleton. He rightfully calls me out for my mischaracterization. He says a higher income tax threshold does not take people out of tax altogether. There are lots of spending taxes that are not easy to avoid. He talking about VAT, sin taxes, a lot of things that again disproportionately hit the poor, who spend a higher proportion of disposable income on these items. What is the purpose of these taxes? Well, I know what the purpose is. Let's talk through the purpose of these taxes. Should we be using tax to achieve policy agendas, or should we just be using tax to purely raise revenue? And I think I can guess the answer, but I want to
give a very brief answer, but I want to get hear Richard's really considered answer. I think it's inevitable that tax is used to achieve policy objectives. And Dominic Frisby's book about tax sets out how civilizations are always shaped by their tax regime. I think it's inevitable.
Yeah. I agree it's probably inevitable, but that doesn't mean it's a good idea, of course, and I think Steve's probably agreeing with me there. Problem is it gets very messy. You've got conflicting ideas going on there. If a sin tax worked, it wouldn't raise any revenue because you'd stop people doing the thing that you were trying to discourage. So, and if you look at the things that do tend to get taxed, what do we tax? We tax alcohol, we tax tobacco. These are things where the price the price elasticity is very low. People will tend to buy them no matter what you do to the price. So, there's clearly a conflict there that even when the government's saying that they're trying to do this for policy reasons, they're actually, if you look at what they're doing and what they're taxing and how they're taxing it, they seem to actually be trying to raise revenue there. And I think this is back to what we talked about earlier, that these things have often been used as a smokescreen to try and hide this. And they're not even often very effective ways of doing social policy or doing other policy as well. I was involved in introducing a VAT type tax to Jersey, and we had the usual ideas that we should have lots of reduced rates and zero rates and exemptions and things for the sorts of things that we've got in the UK. We actually looked at them and found that the effect on individuals, particularly on the less well-off, was really minimal. You had some people who were, yes, if you were living off benefits really hand to mouth, then you could end up being helped by these things. But actually, it was far easier just to deal with that through the benefit system. For most of the people, whether you were moderately well off, moderately badly off, in the middle, well off, whatever, they didn't actually make anything like as much difference as people thought. So trying to do them to do social policy as well really wasn't working. It was messing up the tax system, overcomplicating the tax system, bringing, as I say, these moral issues into the tax system, which it's not really very good at dealing with, and wasn't even really achieving the social policy objectives anyway. So no, I'd say just use the tax system to raise revenue and then use other methods to try and achieve your policy objectives. It's far neater and you can target it far better.
Yeah, that brings up an interesting point about how a complicated tax system is actually less productive and less efficient. So
yeah.
I want to.
I'm actually veering away from that. I'm starting to think complexity might be a good thing.
Yeah.
Having spent 10 years arguing for low flat taxes, what I sort of half feared at the time has come to pass, and we're actually now having flat high taxes, which are the worst of all worlds. And I'm starting to wish that we'd gone back to the days of having a complex tax system so that at least there was a way of dodging some of it.
I will move on to the hot topic in tax right now, which is the International Minimum Corporation tax. So Eamon, who always gets a question, he is our director, Eamon Butler, he always gets a question, and he has two on the topic, so I'll combine them. This is more of a comment. If companies form a cartel to raise prices, governments rule it illegal. So when governments propose a cartel to raise taxes, why do we then think it's a good idea? Is it a good idea or a bad one, and why? And I'll have you answer that, and then I'll ask his follow-up question.
Who's going first? I'll go first. Cartels are always a bad thing. Mm-hmm. We need competitions amongst nation states, as we do everywhere else. If there isn't diversity, how can we know what is the best way to proceed? Because human society, with the best will in the world, always proceeds by trial and error. So, of course, a cartel amongst nation states on tax would be a bad thing. But we do have to solve the problem, which Eamon's also raised, that companies can shift revenues and profits and so forth. But there's a huge sort of moral ocean here about people's obligations to pay tax and different views about it. I wonder if the answer to some of these problems lies in the single income tax proposals of the 2020 Tax Commission. It was absolutely magisterial in its scope and much neglected, but it might well be that we end up having to tax much more at the point of sale But that also is very unpopular because VAT is already too high at 20%. I mean, it's outrageous that it's 20%. But if I may, there's some of these solutions and questions which such a question elicits point back to the original problem that we're just spending way too much money. And we're on a trajectory to keep on having ever more money spent to meet our age-related spending costs. And this is an extremely serious problem because, of course, as people age, they become less able to provide for themselves. So it's clearly a problem that does need to be solved. I'd be very interested in hearing Eamon's ideas about how to solve the Amazon problem.
Yes, Steve's nailed it. Cartels push up taxes, and if you have push up prices. But if you have a cartel on tax, then taxes will be pushed up. And if you look at which countries are pushing these, it's generally the high tax, high government spending countries that are trying to impose this. What's really interesting in just the last couple of years or so is that it's starting to take effect. We're starting to actually see corporation tax rates creeping up again after 30 years of them going down. Not that we were giving big tax breaks to companies, we were tending to reduce the rates while flattening them, simplifying the structures. And where the changes of the 80s and 90s, where we simplified the corporate tax system but cut the rates, were really successful. We were actually getting more money out of companies than ever before. But in the last 5 years, that's just started to reverse and the rates are starting to go up again, just as we're starting to see less competition and more restrictions on competition. And yeah, I used to work for a big law firm doing tax advice, and it's not as easy as it looks. Shifting profits elsewhere is far harder than it was in the 90s. Things are a lot less fun than what we used to get up to back then. There have been big changes in the tax world over the last 10, 15 years, which a lot of policymakers don't seem to be up to speed on. A lot of the harmful tax practices, things that the OECD and the EU have put in, have really made it a lot more difficult to shift profits around. And if you are doing it, you've got to genuinely do it. You can't just set up a brass plate anymore and shift half of your profits overseas. So it's a lot more difficult. What the low tax countries were really useful for, I think, was as a sort of canary in the mine idea that, you know, if you started seeing a lot of your business moving off to lower tax countries, then that was a sign that your tax rates were probably too high or that there was some other problem in your tax system. We saw that in about 10 years or so ago when the government started looking at interest deductions. So, you know, whether companies can treat interest as an expense in calculating their profits for tax purposes. They were looking at very limiting that. And a whole swathe of businesses suddenly started shifting offshore, one after the other, quite quickly. And what it's showing is a sign that, yeah, this is a problem. This is really going to cause businesses problems. And if you don't have that ability for businesses to shift, to move, then what you do is, it doesn't mean that you can just keep jacking taxes up. It means that you're bottling everything in. You're not allowing that safety valve. And suddenly the first thing you know is your economy starts collapsing, you know, stalling, and you start losing that job creation and economic growth. So it's a useful safety signal, I found, to show that you've got problems and to enable governments to react a bit more quickly. And losing that, and having this global minimum tax and all these other things that are going on is just going to mean that we're magnifying the problems. And, you know, as Steve said, we're not seeing different ways of doing things. We're all trying to do things the same way. And if it goes wrong, we're all going to have problems together.
Polly did do her best to join us. So in the interest of fairness, I would like to probably say what she would say. Demos did a report recently called Race to the Top. Demos is the think tank that Polly is the CEO of. And they drew on 20 interviews with tax directors at large businesses with UK operations. And they found that there was high support within businesses for a global minimum international corporation tax.
Oh, of course there is, because they're the established ones. So big businesses always want anti-competition measures because they're the ones who are there already. What it's stopping is the small businesses, the growing businesses, the new businesses from starting up. We have this in competition. We have this in sort of ecological, green policies. We have this in employment policies, all across the board. It's often the big businesses together with governments and lobbyists that are pushing for these things because they're benefiting from them by shutting out the competition. And we're having the same thing in tax as well. They've got their structures in place, they've got their business in order, they know what they can do, and they're a big established business with shareholders just expecting a nice steady dividend every year. They're not the ones that matter, really. It's the new ones, it's the startups, it's the adventurous, innovative businesses that are going to get hammered by this.
I'd like to point out. Oh, go ahead.
We've got to answer the question, do we want crony capitalism or do we want a genuine free market and capitalist system? And I'm afraid we've got far too many examples like this one where we end up giving big business what they've asked for rather than necessarily what's in the public interest. Now, phrased in those terms, I start sounding like a Labour MP, and Labour MPs do talk like that, but then they don't actually deliver policies which force incumbents to compete. I mean, really, in the free market, anyone who has assets and wealth should face a daily contest with others to hold on to and grow their assets through the mechanism of serving other people. That's what the profit and loss system does, is it forces even the most selfish person to earn their way in the world by serving the needs of other people in the estimation of those other people. And this is not often appreciated. This is why I mentioned the theory of moral sentiments. The free market, properly explained, with moral, law-abiding participants, and if not moral, then at least law-abiding, should force even selfish people to serve the needs of others. And if we're asking big incumbents, what do you want, and then give it to them, then we're in danger of serving vested interests instead of the public interest. But I wish Polly was here to argue with us, because if she's watching this on Facebook Live on her poor connection, she'll be shouting at the screen now. So Polly, I'm sorry.
I'm glad we got to get in that one point from her, because I was really looking forward to kind of some back and forth. But
yeah, we would have had a good round about that.
Yeah, I think so. A few things I want to touch on. We have a question from Maureen O'Reilly, and she says, what are your views on increasing fiscal powers in the devolved nations? Is this some sort of internal competition that we could generate, some sort of friendly tax back and forth, or is it just too much devolution? I know what one of my colleagues might say about that.
Well, on the principle that a radical decentralization of power is a good way to enhance liberty, then yes, and the principle of competition. But it does rely on voters deciding that the regime is a bad one and voting to change the party in power. And if I can be allowed a party political point, I think that the SNP's got a pretty poor record in government, and yet people have voted for them. And that is a real challenge to the Conservative Party, because we really ought to be able to persuade the public that voting for us, not the SNP, would result in better public services. Now, what would that mean if the SNP had more fiscal powers? Well, I think they'd make a terrible job of it. But would they be punished at the ballot box? I don't know. What would it mean for the integrity of the UK? I think these questions really need thinking through. But in principle, having competition and decentralized power, bringing power closer to people and making people dealing with the problem that's rather unfortunately called rational ignorance, that people don't take much notice of what politicians can do because they don't have much ability to influence it. But if power is closer to people, then they have a greater chance of influence, and therefore they become more concerned with what is being done. So maybe some of those problems would be solved. And maybe within England, we should have more done by councils. And again, that might mean that people are more concerned about which councillors they elect and what those councillors do.
Richard, do you have anything to add?
Yes, I'm all in favour of tax devolution. I think my fantasy job, I think, would be finance minister of one of those little 18th century German principalities that you can walk across in an afternoon. So, I'd like to get things down to that sort of level. But Steve's right, you've got to do it properly. and you've got to have the sort of political feeling behind that as well. What would be disastrous would be devolving powers to a local government, which could then just blame central government for all their problems and sidestep all the responsibility. So yeah, trying to make it right is probably difficult, and we've got a long way to go, I think, to rebuild those local political institutions that we used to have. But yeah, I think the end result probably is good. Again, you've got different places trying different things. Who remembers was it Westminster Council who set a zero poll tax one year just to show the others that they could do it? So yeah, and having good examples, having different examples, having variety and testing out things is what markets are all about. So the more of that we can get into the government, the better.
It was Wandsworth, we're told.
Yeah, Eamon tells us that it's
began
Wandsworth.
with a W.
This goes into a question that we were asked. Let me just find it. Okay, Christopher Marshall says, there is an expectation that council taxes will have to increase dramatically to cover the losses of the last year. This is going to be hard for residents, but extremely difficult for small businesses. Is there a way we can kind of encourage local authorities from overtaxing, or is it a lesson they have to learn on their own?
Well, very short answer is that there is a referendum limit on council tax increases of 2%. And councils have ended up taking it to deal with the problem of funding social care, which brings us back to the circular conversation back to the problem of age-related spending promises. So yeah, but I do think that we're not going to learn in this society unless people are given the opportunity to make mistakes. And for too long, in many aspects of society, we've sought to disconnect the choices that people make from the consequences that they face. And I think that has led to an undermining of people's capacity to choose well. But again, I leave myself onto dangerous territory. But we should face the consequences of the choices we make, including if you vote Labour, you get higher taxes and lower prosperity.
And yes, there's a lot of blaming of COVID for everything at the moment, and particularly government finance shortfalls and council finance problems. But actually, these problems have been there for a long time before that. The problem isn't that we spent a lot under COVID, although yes, there's clearly questions to be asked about whether that was useful or not. But the problem is that we went into the crisis with spending too high and with the public finances in far too poor a shape. So yeah, I mean, there's a big problem with local government, and a lot of them are doing okay, or some of them are doing better than others actually in terms of getting those efficiencies out. And what we have seen is more use of the private sector, more use of the third sector to try and deliver services, and local government in some ways being a sort of funder and an enabler rather than a provider. That had been getting better for about 10 years. But what we've seen in the past few years is actually going back the other way again. And just like central government's trying to do more, local councils are trying to do more as well. And we're seeing a resurgence of actual council homes, with councils actually building them and running them. And the reason we set up housing associations was actually councils weren't very good at this. So yeah, I think there's big problems coming in local government finances. And yes, as Steve said, some way of linking the tax raising and the decision-making spending and the public attitude to that and the voting on that is desperately needed.
Morgan, can I just jump in? Because anonymous attendee has asked, has the Conservative Party morphed into a social democratic party with its spending plans? And somebody else has asked panelists, is Labour still the risk in terms of tax and spend as the Conservative Party appears to be moving in this direction? I'd really like to make 2 points. The first is the dominant political ideology of our time, in my view, is social democracy. It's big government, it's high spending, high taxes, no practical ideological limit on the competence of the state, and no humility about government's ability to contend with the problems that it faces. And with all of those things have absolutely got to be dealt with. And it requires politicians, since we're the ones who have to occupy the ministerial offices, politicians who genuinely are well versed in the ideas, the doctrines of freedom, which it doesn't mean ideological people, it means practical people who know what they're doing. I am an engineer, and you expect aerospace engineer. You expect an aerospace engineer to both know what they're doing and get on with it. And I'm afraid for far too often, politicians don't really know what they're doing, but they're desperate to get on with something. The second point I would make is that it can't be overstated, can't be overstated what an existential crisis the Conservative Party's just had. We absolutely had to beat Jeremy Corbyn. It would have been a total disaster if they had won. So that has perhaps led us into territory which we would rather not be on. But, you know, I recognise the ebb and flow of ideas, and I'm going to have to keep backing Boris Johnson, even as I continue to speak honestly about what I think the right way forward is.
But there must be some easy wins that we can do on this. There must be spending. You know, what's the government spending? 1 trillion a year now? There must be some of that we can cut or do better, or just not do at all, some of it, without causing huge problems. And yes, the one you keep mentioning is a big, you know, the age-related thing is a huge problem, and that's largely because we should have started dealing with that 20 years ago rather than now. But you know, there must be a lot of other stuff in there that can be cut without causing a meltdown for the Conservatives at the next election.
HS2 is a classic example, but every time somebody looks at it or suggests it, they seem to come back with the answer that it can't be done. And that seems to be now because the infrastructure industry is so dependent on HS2 that it can't survive if we just chopped it. And that's the only explanation I seem to be able to deduce from what's gone on. And it's a very sad state to be in. I continue to think that HS2 is a terrible idea. If it was a good idea, the private sector would be willing to pay for it because it'd be expected to be profitable. And I suspect that the private sector would be willing to pay for additional runways, or they would have been pre-COVID. But yeah, we should chop things like HS2.
Mm-hmm. And is part of this back to what we talked about earlier about the civil servants having the wrong drivers? You know, or being given the wrong drivers, being given the wrong motivation.
In the end, ministers must take responsibility. And you know, I had great, if I say so myself, great relations with my civil servants in DexU, and because I treated them with respect and gave clear, I think, clear direction on what I wanted, which probably not surprised very many people. And then the civil service will give ministers what they ask for. But it does require ministers to act as a coherent force together and give a consistent steer to civil servants on the direction they want for the country. So if ministers are either not coherent together or aren't clear what they want to deliver, then you know, you get in a pickle.
Mm-hmm. And linking spending cuts to tax cuts as well, which we don't seem to have been very good at, largely because we only do spending cuts when we've not got any money. It's quite difficult. But if people could perhaps see the benefits of that, of spending cuts coming through.
Yeah, absolutely. We have just about fewer than 10 minutes left, almost fewer than 5 now. So I want to get to 2 final questions from the audience. We have a question from Howard, and we'll have to have quick answers so we can fit them all in. But question from Howard: what role could or should taxation have in the growing disparity between the poorest and the richest in society, with the ratio between the two being possibly at an all-time high?
The welfare state is always going to be redistributive, and we should accept that and work with it and have well-informed ideas about what should be done. But if people want to hear me bang on at greater length about what I think are some of the causes of wealth disparity and economic injustice, then they should tune in tomorrow for a Joseph Rowntree Foundation seminar where I'll be speaking on that topic.
Yeah, it's a good plug.
There's much better ways of solving wealth inequality than taxes. We need to be looking at taxes to raise the money that the government needs, and looking at other social policies, particularly things like job creation and opportunities, in order to deal with the wealth disparity. I'm not convinced it is actually higher than ever, but yeah.
The caveat was possibly, so I'll leave Howard to have his sources in the chat. And we have a question from Twitter and also a question along the same lines in the chat. I can't be sure if it's the same person, but let's assume it's two different people. What is the merit of removing the personal allowance so that everyone pays income tax? That would surely encourage those on low wages to also want to reduce the overall tax burden. The IFS have made similar objections, saying that if you don't have skin in the game, do you have any interest in lowering the tax burden? What are the merits of that?
I'm not sure that works. I'd like to think it would, but my fear is that if everyone's paying tax, then everyone feels that they have an interest in the government spending more. You get the people who say, well, I've paid for my national insurance or whatever, therefore I want to be seen by a doctor immediately. There's the danger is that actually we end up with more demands for government spending because people are wanting to see that actually something's happening in return. And I'd like the idea that it works, but the danger is that we end up with more, as I say, more government spending, and we actually end up hurting the people who are least well off and least well able to deal with this as part of the experiment. That's
the crucial point. We've got to have compassion for the poor. And this is where I think people on the right and libertarians in particular have gone wrong. I mean, we need to be bleeding heart libertarians. I mean, I'm a Christian libertarian, which means that I can alienate everyone in the room. But, we need to be bleeding heart libertarians. And this is, I think, why there've been ideas like Milton Friedman's idea for negative income tax. This is why we should support universal credit. We should be making sure that people who don't earn very much are able to look after themselves and their children. I mean, food bank use in Wickham has soared, and it needs to be ended. It's not right that in our society there is so much food bank use, and we must have compassion on people. And I do believe that most sincerely. We also can't allow ourselves to live in a fantasy world of libertarian utopias. We've got to try and take practical incremental steps that allow us to do better for everyone.
I think that is a lovely note to end on. We are just up to our time limit. So I want to thank you both for joining us, and thank Polly for her efforts in trying to join us. And thank you to all of our audience members for all of your questions and interaction in the chat. You can find us here every Tuesday at 6 p.m. Next week, my colleague John McDonald will be discussing the cost of consensus with David Davis MP and Steve Davies of the IEA. So we hope to see you next week. Thank you both for joining me.
Thank you, Morgan.
Thank you,
Richard. Yeah, and thank you everyone online.
Good night, everyone.